Good morning once again, and welcome to the Haven Financial Group radio show. We appreciate you listening this morning. Feel free to give us a call at 612-504-8400. Visit us online also at havenfinancialgroup.com. With any questions, worries, concerns, maybe something resonates today in any of these retirement topics. Maybe it is taxes. Maybe it is estate planning, wills, trusts, and legacy planning. Maybe legacy, if you're listening, is important. Have you taken the proper tasks to make sure that you accomplish what your goals are? Long-term care, life insurance, have you had those reviewed? Maybe an annuity x-ray, Medicare, any of these retirement topics. Thankfully, at Haven Financial Group, we're able to help in all of these areas. Yes, you could say it's a one-stop shop, and it was the ultimate goal that I had 11 years ago, to have multiple personalities in all these areas, and we're very thankful that we're able to help lots of people in these areas. And if that's you, we'd be honored to sit down with you as well.
Absolutely. The number again is 612-504-8400. We're taking a deep dive into tax strategy today, primarily because tax season has just passed us. And now this is the time when we begin to prepare, strategize for the following year. And if you're somebody who walked away from this year's tax returns hoping you never, ever see something like that again, this is certainly a conversation for you. Give the folks at Haven Financial Group a call. We want to end the show today talking a little bit about estate taxes. Estate taxes can be a very difficult thing for those left behind if steps have not been taken. We realize that sometimes this applies more to bigger estates, and we are always talking about everyone's retirement. But there are things to be learned here, Lance, whether your estate is large or small. So let's talk a little bit about estate taxes and who should be the most concerned about that at this stage of the game.
So like you said, Kim, larger states, so people who pass away, if they have a lot of money, we need to look at the federal level first and say, are you going to be worth more than $15 million? If you are, then we have a federal estate problem, and that's going to drive a lot of questions to say, what are we going to do about this? Then we can go to a little bit more smaller states. And for Minnesota, our residents here, if we are worth more than $3 million when we pass away, then that's where we have a Minnesota estate tax problem ourselves. So while a lot of times we think, federal is $15 million, we don't have to worry about it. It's Minnesota where we have to say, hey, $3 million is not that big of a threshold, especially when you start looking at your house, your retirement accounts. You maybe have done well for yourself and have another investment account outside of that a lot of people, it's not hard to get to a $3 million estate in Minnesota.
Sure. So let's talk a little bit about how you shelter some of that money for your kids or for your loved ones, that you leave those dollars behind.
So the first step for a married couple, typically spouses are going to leave everything to each other. If that is the case, then there's not going to be any taxable estate on that one because of the marital deduction. So if you have someone who is worth, we can even say $50 million because we're going above the federal estate, but it's all going to the spouse that's left behind. The one who passed away is not going to have any taxable estate. Mm-hmm. Then the next one we look at is the one who is remaining, of what do we do with that estate now? Mm-hmm. And so then that's where we can start looking at a bunch of different strategies to either get money out of the estate, spend money, a lot of variety of different things that we can do.
Where does a trust come into play when you're talking about trying to protect estates?
So a trust is a legal document that is going to give directions on what to do with the assets. So some people will use a trust to say, hey, when I pass away, I want things to be split evenly between my children. The trust is a great vehicle to avoid probate. And as people who have gone through probate before, it is not a fun process. It takes a long time. You have to get the courts involved. All the information is on public record. And there's a lot of downsides to it that people look at and say, I don't like this idea, so I want to have a trust to do that.
Mm-hmm.
Trust can also be set up for specific uses. So if we have a special needs child that for a variety of different reasons can't have assets, can't have income, but needs to have somebody or something paying expenses for them, then that's where we can have a special needs trust set up.
Sure. All different.
If I could comment on trust, because I've had years of experience in estate planning. I just came off wills, trust, and legacy planning with our good estate planning partners from Provision Law, as I mentioned earlier in the show. Listener, there's a lot of confusion. People think trusts are only for rich people. Not true. It doesn't even matter the value. There's not a rule of thumb with value. Yes, rich people probably should have a trust, but many others could benefit and maybe should look at it. That's why we teach the classes. That's why there's no cost for a consultation with our attorneys. We schedule them here at 612-504-8400. So if you are like a lot of Americans that have procrastinated, because human nature is procrastination. I'll give you an example. One of the couples that was at our class, I said, how long they go, we've been thinking about this for a long time. How long is a long time? And I've heard this many times. Well, about 42 years. Wow, that's a long time to be thinking about something. And how young are you? Oh, 68. Oh, I think maybe now's time is of the essence. So there's value to the trust. It's not only for rich people. And I have to clarify, because there's also a misconception that revocable trusts avoid the nursing home. That is simply not true in the state of Minnesota, which is where we reside, and that's what I can speak to. So get all the facts associated with it. And I'll say one other thing as well. We meet with folks, and I had it twice last week. The couples, they've accumulated. Legacy is important. They go, you know what? We want to bless our children now rather than giving them something when we pass away. If there's anything left, that's great. But our kids really need the help now. I sense the listeners, the younger generation, ears are perking up because right now they're thinking, Larry's going to tell my parents to gift me money. No, they don't have to gift you money, but it is an option if that is a goal of theirs. Lance, just shed some light on gifting, what the annual amount is. Some people say, well, I can only give this much. And what's the lifetime exemption? Would you just please comment on that?
Yeah. So the annual gifting exclusion is $19,000 from one individual to another individual. So if we're looking at parents giving to a child, mom can give $19,000, dad can give $19,000. So each child therefore gets $38,000. Then if the child is married, then mom and dad could give an additional $38,000 to the spouse. Then if there's grandchildren involved, then grandma and grandpa now give $38,000 to each grandchild. Mm-hmm. So you can see how this could add up pretty quickly for gifting purposes. And when we talk about this $19,000 limit, it is a reporting limit. Anything under $19,000 does not need to be reported. It is when we go over that $19,000 that you're required to fill out a gift tax return. Mm-hmm. Now, earlier we talked about your state federal exemption at $15 million. When we go over that $19,000 annual, then that is when we start burning up our $15 million exclusion. So people get this misconception as well that if I give $25,000, so now that there's $6,000 over the limit, oh, now I have to go pay taxes. Well, no, you're just going to use $6,000 against that $15 million lifetime exclusion, so you don't pay anything. Mm-hmm. So if you want to make a large gift one year of, we'll just pick up and say $200,000, great. So now we're looking at $181,000 that is going to go against your $15 million lifetime exclusion.
Sure. Absolutely. Again, sounds a bit confusing right here, but something that you guys could sit down with any family and talk through, and another part of possibly your strategy when it comes to tax planning. 612-504-8400 is the number. That's how you reach the folks here at Haven Financial Group. Give them a call. Tell them you heard us here on the radio and you'd like to sit down, talk about taxes or anything related to retirement planning. And for that matter, Larry, for investing. I mean, I know you guys talk to a lot of young people and help them with their investment strategies as well. So a lot to take in today. And I know that for people who have just come out of the tax season, Lance included, enough's enough maybe, but this is the time, friends, to get out there and start that strategic planning for the following tax year.
Retirement puzzle pieces. Do you have all the puzzle pieces? Do they go to the retirement puzzle? Whether you're listening, if you're young or older or mature or whatever you want to call it, it's never too early to come in. You have nothing to lose. Give us a call, 612-504-8400. Visit us online. We'd love to visit with you. At the end of the day, if you can learn something, education is the potential for power. It's what we do with it that really matters. And Kim, Lance, thanks for being with us today, and we look forward to visiting with you next week.